All right, I think we're ready. So let's see. Put any questions into the chat. All right, so pretty much today we're just going to start working on this algorithmic, or this algorithm for TQQQ on July 26th. So if you need to ask any questions, just put them in the chat. But pretty much I'm just going to try to put together a code that will identify these areas here, and maybe this one. I don't know, if I get one of the few, then I'd be happy, and then I'll just kind of entitle it AM drop below 200 MA, something like that. So whatever happens in this first 15 minutes or so is what I'm trying to identify, or what I'm using to identify as, part of the setup. So this is what it looked like for today. And these here are entries that they're actually from another code that I had, and it was a strategy that I developed. So for right now, I'm just going to disable that strategy so it's out of the way. And let's see, we're going to do this. And since I was last on, I figured out a few ways to actually make my coding a little bit quicker. And yeah, I mean, quicker for sure, and less keystrokes. So that's what I'm going to work on today. So first, we're going to open the coding environment. It's here, development environment. Let's chart. Let's see, coding screen. If I can open that up as well, put that there at the same time. I want to rename this one so just to make it a little bit easier. Let's see, easy language. All right, so you can see that while I'm working here. All right, and then let's go here. And I trust that that's going to continue doing its thing. All right, let's see. So we're going to go and we're going to open up. Not going to do a strategy right now. Right now we're just going to do a show me. And title, this is going to be exclamation mark. We're doing the 5 minutes. So 5M, the date, 7/26/23, TQQQ, and then we're going to put AM gap down. Actually, I have to look back at the actual chart to see whether or not it officially gapped down, because I think I have yeah, I'm not sure if what I'm looking at now is the AM hours, or if it's just the regular trading hours, but I'll look at it here in a second. All right, and then the show me dip is my template. So this template here is what I figured out is the best way to go ahead and have all these conditions and everything in place. And then so all I have to do now, all these will be true, all these are already in place. I don't have to go and add and condition each time. I will need to add values as I go, and probably I could go through and do this. Because it doesn't have to reference anything until I want it to. So let's do value 2 equals 0, value 3 equals 0. And usually when I'm doing values, it's primarily for counting bars or something like that. And so I really don't need many of these values. Usually I need 2 at most. All right, so then let's verify that. And then we're going to go and we're going to save that as the template that is the show me dip. So again, it just makes everything a little bit quicker. Alright, so the first one that we want to do, we're going to come back over to this screen and we're going to look and see here what's going on. So here, if you guys are joining me for the first time, which you probably are, we zoom in on that, you can see this black line here is the 9 simple moving average. This yellow one is the 15 simple moving average. Green one is the 25 simple moving average. This dotted black is the exponential 9. This dotted yellow is the exponential 15. Dotted green is the exponential 25. And then the red line is the 200 simple moving average. This red line is the exponential moving average at the 200 period. This line up here, this dotted line, is the 2+ standard deviation of VWAP. This line down here is the -2 standard deviation of VWAP. VWAP being this blue line in here. And VWAP is your volume weighted average price, for those of you guys who are following along. All right, and then these green lines here are just trend lines that I've drawn. They can actually be taken away. I was using them as I was trading today, and I guess I did okay today. I closed with $469 in profit on a, I guess it was $25,000 account. So not bad. I mean, for me, that's not bad. So my goal, and this is a simulation account, but my goal is to be able to make $300 a day, and I'll be good. All right, NASCAR All Out. Have you done any coding with ThinkScript? Yes, sir, I have. Yes, ma'am, sir. Yes, I have. So ThinkScript, and I did a couple of videos, kind of the comparison between ThinkScript and Easy Language. ThinkScript I liked a lot. I felt like it was fairly intuitive. I don't feel like I could do as much with ThinkScript as I can with Easy Language. I feel like this is more of a robust platform, with the exception, there's only one exception. The only thing that I don't like about Easy Language compared to ThinkScript is with ThinkScript you could reference multiple time frames in one indicator, right? So I could say if on the 5-minute bar we have moved more than 5% over the last 5 bars, and on the 1-minute bar we have retraced 0.5% over the last 3 bars, it can reference 2 time frames. Easy Language can't do that. So I don't know what the great workaround is, and it's something that I've been looking through the Easy Language, through the forums and everything, and I haven't been finding a lot of good answers about it. But yeah, I mean, ThinkScript is pretty nice, and I have, I've got the Thinkorswim platform, and I use ThinkScript, but in the last several weeks, several months, I've been devoted fully to Easy Language. So some of the coding language I'm a little rusty on with ThinkScript. But like I say, I feel like ThinkScript, a lot of it is processing and algorithm and logic, right? So you can turn that and do a bunch of different things with it. They've got different things to make it more complicated, loops, arrays, all that kind of stuff. But I feel like this is more complicated, and so to me that means that there's more that I can do. Have I tapped into all of it? No, I haven't, but yeah, there's more that I can do. So any other questions, just put them in the chat. I'm gonna go ahead and get started and see if I can't pull some of these points here. So one thing's for sure, we know that we want the bar to be below the 9 EMA, right? Or at least over here, it's not necessarily the whole entire bar is not below the 9 EMA, but at least the open is. The low is for sure, the open is. So over here, we're going to come back to condition 1. Instead of true, we're going to put that the open is below the, and this is one of the formulas I've created. And that that average C is just pretty much saying the average of the close, and the 9 is the input. The 9 is my period, right? So this is just saying that the open is below the 9 period simple moving average. Okay, all right, so let's re-verify that. All right, so we got a clean verification. We're going to come over here back to the platform, to the chart analysis, go to show me, and then open up the, where are we at, 5 minutes, 726 AM gap down. Open that up and hit OK. All right, so then it pulls up all these dots here, and you see some of these dots over here as well. If we zoom out, we can see what kind of mess we're in. All right, we certainly don't want these up here this high. So what's going on here? What can we pull apart? What logic can we pull out to take these guys out of the equation? One of the things I do typically like to see is that the is that when we're looking for a dip, when we're looking for to get in on the low side to move up, that we're looking for a bearish bar. So I typically always will at least put something like this into the equation. So I'll put that the close is less than the open, which just means that it's a bearish bar. And then sometimes I can go down here and I can find something in regards to volume. Right, so here, getting toward the end of the day here, this is referencing 320, and let me see here. I think that's too big in your guys' screen. Boom, boom, boom. You should be able to see that without it being too big. Okay. Alright, I think, yeah, there we go. Okay, that's better. I feel like when I blow it up for some reason, it takes your entire screen and you can't see what I'm doing. Yeah, you can't. Alright, so let me make that smaller. Move this over. I'll put it right here. I wish I could blow it up a little bit more, but hadn't figured out how to do that. So, I'll work on that another day. But for right now, just want to identify these few points here. See if we can isolate them. All right, so we got the open, which I don't love the open because that's just not something you typically want to take your initial trades off of. So I'll put if the time is over 9:45. 9:45. Okay, let's re-verify that. Let's see, what do we do? Time is less than. No, time is over 9:45. All right, so that got rid of that that initial bar there. Now we have these guys to contend with. So this non-moving average, simple moving average, is close to the VWAP. I don't think I really like that because VWAP is a place where stocks, where the chart can turn around a lot of the time. So I probably don't want it. I don't want it to be that close to the VWAP. But I know for sure one thing that I don't like to see is the bar crossing this this 15 moving average. So I'm going to put that the close has got to be less than the 25 moving average as well. All right, so close is less than average 25. We verify that. We got rid of this bar. Volume down here, volume. All right, so here we're under the yellow line down here is a 6 moving average of the volume. The blue line is a 50 moving average. So we're under here. Over here we're over. This is just showing that that the buyers and sellers are coming to a disagreement. So there's a lot more transactions happening here. And then when you get over here, it doesn't have to happen because the buyers have already, staked their claim. All right, so now over here we have to move up. And when we come back down, the volume is just at the 6 moving average. Here it is too. So there's not a lot I'm gonna do with the volume here. I could try though, just see. I'll probably put like the 5 moving average. So volume is greater than average volume 5. Let's see if that isolates get some of those other ones out of the way. It did get rid of a few of those. Still don't like these here. So let me pull up an indicator that shows how close the moving averages are together, because you can see that in here, if you zoom in, you can see that these moving averages, boom, 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 they're all kind of close together. And if you do anything with like Bollinger Bands or anything like that, you know that, and even like with these standard deviations of the VWAP, when prices come to an extreme is usually when they start you know, when they make a move. So when everything is kind of close together, you're not likely to see as much. You're not likely to see at least the movement to the upside. So surely everything came close in here, and then you got the movement to the downside. So I'm going to open the indicator, something I call the EMA spread. So the indicator, open EMA spread. And then this will show us how close the EMAs, the exponential moving averages, are to one another. All right, so if you can see this line down here, this is the line representing the distance that the spreads are from one another. So if I do this, I just kind of show you what the. All right, NASCAR. Let's see what you got. I love color clouds in my charts. If the average daily volume is below 10K, it will shade the chart light green between 10K and 100K dark green. Yep. Just find that with shading, I can see at a glance what volume is doing. Also, love use price love shade. Yeah, I agree. Yeah, on ThinkScript they have what they call cloud, right? Yeah, the clouds, color clouds. And so I have like a lot of indicators where I can, depending on like if there's a cross, like if there's a moving average cross, I might have that the cloud becomes green, and then once the cross hits, kind of like MACD and all that kind of stuff, once the cross hits, then it'll go to a different shade. And yeah, I mean, as far as user interface, I mean, it's lovely. I mean, being able to do the different colorations and the different just really being able to get it quickly is something that ThinkScript does better than Easy Language. But like I said though, I mean that's good, and if you got your scripts and everything set up for that, then you know, kudos to you. My scripts aren't set up that well for that, and or maybe I'm just not as visually cued in as I would like to be. But I feel like ThinkScript can be like Home Depot, where it's pretty, bright colors, you know, everything like that. But then Easy Language is like Lowe's. I mean, it's rough, it's raw. I mean, it's, you know, the concrete floors, they ain't been finished and stuff like. But you get better prices most of the time, and you get people working there who have experience in the trade, right? You know, well, and that's also another point too, though, is with ThinkScript. I feel like ThinkScript has a just Thinkorswim in general. You can call in, and their technical support and customer service, they're on it. They can help you with it. Yeah, ThinkScript, you can call in and you can ask the people about what you're seeing on your chart or what's going on, and they can tell you about it. Easy Language, TradeStation, they can't tell you a thing. They can't. They'll tell you to go to the forums online. So, yeah, I don't feel like that. Easy Language is a platform, is a coding environment that's best suited for beginner coders. Yeah, you probably want some experience with ThinkScript or something else prior to coming over to Easy Language, because there's not a lot of support there in terms of this. But I did find out something this morning. If you saw the strategy that I had up earlier, I was trying to use a strategy. Let's see, and I don't know if the strategy will pull anything that any points from today or not. I don't think it did, but let me see. So yeah, it did, right? So this is a strategy that I put together from, I don't know, a couple weeks ago or something like that, and well, I was trying to run the strategy optimization report just to kind of see where it was and what it was doing, and just in terms of being able to get out of the position. So I could get in the position, but I was trying to get out of the position based on a percentage of my entry price, of the price that I was in at. And so I needed to take my average price, I needed to take the price I was in at take a percentage of that, whether it was I think actually like my stop loss should have been like 0.05%, right? And so I had to do that calculation, multiply that by my average price, and use that as my stop loss, or to exit at the next bar once that level was crossed. And I couldn't seem to figure out how to get my average price, because there is a let's see, if we come over here, if you look on this chart over here, you can see get average price. So there's get average price. There's a lot of get average stuff, but there's get average price up here somewhere. Well, shucks, I can't find it now. Get price. It was something like that. But like I said, I'm just now. Let's see. This is EMA spread indicator. I don't want to do that. I want to come over here and show you. There's entry price, but there was something else that I was working on earlier, and it was get average price. But either way, get average price was supposed to work like get entry or average entry price. Get average price apparently gets the average price of your live account. And so since I'm doing a simulation and I don't have any positions in the TQQQ account in my actual live account, I guess it kept coming back with 0, so it was throwing off my strategy. But I was able to go into the forums for easy language. You know, you go online, you log in. I was able to go on the forums, put in a quick note for a little bit of help, and one of the trade station one of the environment specialists, he responded to it actually within probably like 10 or 15 minutes, and he said, you know, you want to use entry price. So once I did that, I mean, it worked perfectly, or as average entry price, it worked perfectly. So like I said, there may be support there, but it doesn't look the same as it does with Thinkorswim. All right, so let me see if let me see where we at with this. See if we can get rid of these couple bars here. Like I said, I think I was going to show you the spread here, but oh yeah. So if we go back over here, this is the formula for the spread, and if I right click, I can do. I can't do definition of the spread because it's not an easy language word. It's something I made up. So I want to open the function. And this is what I created here. So it's the average close of the 9, average close of 25, average close of the 15. So I'm taking all those three averages, those moving averages, and I'm doing the absolute value of the difference between the two. So the difference between 9 and 15, 9 and 25, and then 15 and 25. Taking the absolute value of those differences, and I'm adding them. All right, so that's how I come up with this this number here, this plot here. All right, so this one here is pretty high. So if I'm looking at this dot here, if I look over to my left, it's 0.5. This one is still also in the dip. This one here, it's higher than these last two, so we'll remember that. This here, this yellow dot, this one here, this value here is higher than 2 bars ago. All right, so maybe that's the logic. This one here is actually lower than 2 bars ago. So that logic wouldn't satisfy all those points. So I don't think that's what I would use. All right. I can do the difference between the distance between the close and the EMA. No. Oh, I know what I like. I know what I like. All of these points, kind of what I was saying about the Bollinger Bands and getting a certain distance away from you know, all the action, and then coming back to it. You see this this line down here, this this -2 standard deviation of the VWAP. This bar crosses that. I mean, this one does too. So we still might have to do something to get rid of these. But this one here gets pretty close. And this one here, this low touches down on it. So I can't say that it's got to be below it. I can't say that it's got to be above it. I think I've got to say that it's got to be within a certain distance. And the problem here that makes it more interesting is I could just compute the distance here. So I could just go find out what this distance from this low to this point is here. That's 0.5%. I could find 0.5% of that price, or I could just calculate what the distance is. But if that moves in another day, then I'll actually lose the usefulness of the value. So what I'm gonna do is I'm gonna open up another strategy. I've got to open up the average price. Average price. Average true range. I can do average true range smooth, or I could just do average true range. Let's go down and just do average true range. Okay. It's set on the 14. I usually do the 7. And I typically do the 7 when I'm looking at these 15-second charts, but right now I'll do this. All right, so average true range here. In this range, we can identify this with a box because this is what we're looking for. What you do? This area we're looking for. This area we're looking for. This area we're looking for. That's high. So average true range is not a simple formula that we could do with that. But we could say, so this range here is average true range of the 7 is about 17 cents. And this distance here, let's see, we're going to edit the trend line. We're going to have it tell us the price net change, which is 22 cents, so 17 cents, 22 cents, okay. All right, and then let's see what this distance is. This is 11 cents, and this average true range is, if you look up at the top left corner, you can see that ATR is about 11 cents. Look at that. All right, and then this one here, all right, and that's from the, that is, yeah, but that one will be absolute value from the -2 standard deviation to the close. This one would be absolute value of the close to the standard deviation. This one, all right, so we do the same thing. We do the, well, that's not the close. That would be the close. That would be the close. This one would be, all right, the close. And see what we get. All right, so the distance there is about 21 cents. And if we go down to the bottom down here, look up in the top right corner, top left corner, you see that it's about 41 cents is the value this time. So we can do something simple. We could just say that the standard, that the difference between the close and the -2 standard deviation of VWAP is greater than the average true range of the 7. So that's what we got to put in. The only thing about that for me is I don't know how to calculate the volume weighted average price of the -2 standard deviation without actually going in and pulling that code from VWAP and putting it in my code. And that's fine, I can do that, but there might be an easier way. All right, NASCAR, let's see. What code have you put together that you found most useful in trading? Like if you could use on one customized code. And that's the thing. That's the thing, NASCAR. As much, you know, fun and interest as I have of coding, let me see if I can pull up this this one screen for you. Edit studies, because that's one of the things that I'm looking at is is the number of codes I do. Let's see. All right, so I'm going to have to studies. Is that pull it up for you? Trade station. Settings. Yeah, there we go. Okay. All right. So yeah. So that's the thing is all these studies here that I have, all these show me's that you see right here, I'm making indicators for like every time frame, every day, every situation, and then I have a spreadsheet that I go to, and I put them there, and then so I make a couple of notes as far as like what the setup is, how effective it was, that kind of thing. Every chart, every ticker has different participants. It's got some participants that are heavy hitters, some participants that are not, some participants that put in their money a long time ago and they're just waiting. There's different participants with every ticker. So I found that each ticker has a different personality. Just like you and I, we gonna behave differently if, you know, somebody brushes up against us at the grocery store. We're just gonna behave differently. We might both be human. We might both have a you know, kind of a cool, calm, and collected demeanor, but we're both gonna behave differently. And also, just me, sometimes I'm having a good day, sometimes I'm not. So whether or not it's a gap up or a gap down, or there's higher volume or lower volume, or there's something going on, you know, then every ticker is going to have its different it's different moods as well. And so I'm finding that, and that's why you like if you look on my channel, you'll see that I only do TQQQ, right? Because being that specific. And like I said, I made a couple dollars on it today. That's all I'm looking for the day is $300 or $400 a day. If I can make that a day, then I'm good. But when it comes to, like, especially when I was on Thinkorswim, I you know, was doing a lot of trading, probably over trading, but I was trying to apply my same scripts to everything, to all the micro caps, all the small caps, that kind of thing. And like I said, a lot of those stocks, some of them would have a fluid amount of volume, and they would they might respond okay to your script. But then a lot of them that I was getting into, they have catalysts that would like really bump them up for that day. And then once they get bumped up for that day, everybody's exited. All these buyers down here have exited, and now the stock starts coming down. There's nothing to keep it from coming all the way down. And so, yeah, I've learned through trial and error to be specific. And I'd love to trade everything. That's because I mean I'm interested in doing it. I like doing that. It's fun. But at some point, I say, you know what? I'm gonna stop having fun. I'm having too much fun, and the market is taking too much of my money. I said, so all right, I'm just gonna focus on one thing. And if I can make money, I can leave the fun for simulation accounts. I'll leave making money for real accounts, so I'm just gonna flip-flop it. I'll leave the fun for simulation accounts. I plan to make money with real accounts. Yeah. So, but a couple of things, and I have to look back at my notes, but I have found a couple of things that, yeah, I've been working with making a code or putting together a code for a while, 10, 15, 20 minutes, an hour, and then all of a sudden I say boom, and I put in a condition that actually, you know, pulls it right together. And so I'll make a note of that, but that's different for every day. So there's not one piece of script that is like the magic bullet for sure. Oh, your niche is IPOs. Oh man. Custom codes for tracking IPOs. Listing how many days the stock has been trading in a watch list. Yeah. I mean that's awesome, man. But I wonder, so when you're doing that, are you looking for a certain amount of volume to then trigger your entry, or like what are you doing as opposed to just looking at the IPOs and kind of keeping track of those, because IPOs are fairly volatile, right? I mean, so and I was talking with one of my buddies about it today. You know, got into IPO, you know, tanked on down. So, and of course, it hits a little corrections on the way, but tanked on down. And so, what are you looking for that says, hey, it's about hit the bottom, time to get in? Or are you looking for IPOs that are primarily trending up? You don't get into them unless they breach, you know, a moving average one way or another. That's a good question for you. What do you got on that, NASCAR? And then I'm gonna, while you putting that together, I'm gonna come back over here and see if I can. Let's see. I want to do something with the absolute value of the. All right, so I gotta go and pull that VWAP. And I pulled it for another chart. I need to actually copy and paste it. That's what I'm gonna do. I'm gonna copy and paste it into a notepad, and then I'll have it. But I think I used it yesterday, so 725. Let me see if I have a 725 file. $725 file. No, was it the strategy? Yeah, it was the show me. 725. There we go. 15-second, 7:25 a.m. gap up. All right, so we're gonna open that one. And nope, I didn't put it in here. All right, let me try one more, and then I'll just try to retrieve it from the VWAP. All right, 7:25. Oh, there's a 1 minute that I did. So I did the 15-second and 1 minute yesterday. Ah. All right, it's not there. Did I do the 5 minute also yesterday? 5 minute, 27:26. Nope, that's the day. 7:15. All right, so let me just open. All right, so I'm gonna go up here. I'm gonna put it at the top of the screen, VWAP, hit enter, right click, definition of VWAP, and then it's gonna. No, I don't want to. I want to go to the code. I got. All right, so I'm gonna come back to the main screen. I'm gonna right click on VWAP, edit easy language. And it's going to bring me back over to the easy language. It's going to open up the code. I'm going to select all. I'm going to copy it. Then I'm going to go back to the code I'm working on today, which is 7:26 on the 5 minute. I'm going to put it at the top of the screen, paste that. And I do know that one thing that the show me does not like, show me does not want you to put plots in. So we got to get rid of some stuff. We got to clean this up. But I do know that what I'm looking for is a lower band. So we can get rid of this. We can get rid of if alert enabled, VWAP. We can get rid of all the alert stuff. If we got a big N and we got an N, so we get rid of all that. We don't want to plot anything, so we can get rid of all the plots and get rid of that end. And now we're left with the lower band. There, lower band. All right, so lower band is what we're looking for. So absolute value is the close minus the lower band. Absolute value of that it's got to be greater than average true range of the 7. All right, so let's see what that looks like. Fingers crossed. Bam. Alright, so it did work, but it didn't do what I wanted it to. Let's see, the close. Close is here. And I said that distance was about distance from here to the close. 22 cents. Now this average true range down here is 17 cents. Okay, so that's lower. All right, so that's lower. And then this one is 26 cents and no, 11 cents and 11 cents. Yeesh, that's going to be close. All right, and then that's another process that I need to become more familiar with is trying to find easier code. And actually, I can make a function for that. Matter of fact, I need to make myself a note because I can make a function for that as long as the price is within the high and the low. And there might already be a function for that. But all right, let me see what we got. All right, here's an IPO started 2020. $7 and random 160. Yep. Ever since that, let's see. Oh man, that's awesome. So, have you met success with that? I mean, it sounds like you are. I mean, you're really paying attention to what's going on, like you said, to the catalysts and to and some of the underlying fundamentals. Which, so then you're not necessarily, or are you a combination of a fundamental and a technical trader, or where would you put yourself? Because it sounds like you paying attention to a lot of fundamentals as well, which. If you're doing a combination of the two, you'd probably be unstoppable, man. Or lady. All right. Let's see. So I did less than. So I'm going to take absolute value out. We're going to assign that to value 2. And this is where the fun comes in. Value 2. So value 2, it's got to be less than 1 point, let's say 10%, add on 10% of the true range. It's got to be less than 10% of the true range, and value 2 has got to be greater than, let's say the bottom range will say 0.9%, so 10% below 0.9 times average true range of 7. Boogity boogity. Nope, did not do it. Oh, that's because this one is almost double, right? So this one was twice as much, which, I mean, in all actuality, this one was a pretty funky one to get into. But what did it do? It cleaned that up. That's exactly what we wanted. Bam, we got that. Bam, we got that. This one, we wouldn't have got it because that's a bullish candle, and we assigned it to take only bearish candles. If I take that out, if I take condition 2 out, I'll just do the 2 slashes and go back and re-verify it. We'll probably get some other stuff. What did I do? Condition 2. Let's see. If condition 1, oh, okay. It's okay for me to define what it is and not use it. It is not okay for me to use a condition when it has not been defined. All right, so down here is where we're using it at, so we'll take that out. All right, so now we'll re-verify it. Okay, so it put it back. It put it back plus, so we've got everything. So this was not going to be a candle that I identified anyway. So, you know, this is just one of those days where I just go, those are okay. Those are okay. I'm going to adjust this so that it does capture this here, but I almost guarantee that it might get some extraneous results in too. So we'll go back and we'll change this average true range of the 7 where we're doing our upper limit, and we'll multiply this by 2. Or we'll say 2.10, 210%, and re-verify. Now wait up. wait a minute here. All right, so this one here went 20 cents, and the average true range. Oh, the average true range was 40 cents. So it's got the value of 2 of that difference has got to be less than average true range. Value 2 has got to be less than the average true range, which it is. And wait a minute. And value 2 has got to be greater than that's where we're getting to that. Okay. So this is saying 90% of the average true range is your lower end. So this is saying 40 cents here. We're taking 90% of 40 cents, which is 10 cents off, so that's like 36 cents. So we're saying that the absolute value has to be over 36 cents. And this absolute value is about 20 cents. So if we make this go down, now we're definitely will likely get some other results. So we got to take this down to like 45%. Verify. All right. So what did we do? Oh, we got rid of too many things here. Let's do some backspacing. Some undo. And then we're going to make this 45. Re-verify. All right, good. All right, so, I mean, I could almost be happy with this. So we did get these. And again, I don't want a bullish candle. So I'm going to go back to condition 2 and make sure that that's applied. All right, so we lose that one. We get this one. We got that one. We got this one. I don't want this one, but I think I could settle for it. All right. See what you got, NASCAR. 2020. Yeah. $2022. Keep the IPO market. Fourth quarter, they're coming back with these steps changes. Yeah, so then if you were doing Hong Kong IPOs and Chinese IPOs, were you doing like the ADRs? What is that? The or it's not even just the ADRs. Is that the Asian depository receipts? Are you doing ADRs where you're trading them on the U.S. stock exchange, or are you doing OTCs? Because I'm afraid of OTCs for other reasons. You know, for one, it costs to make those transactions. I think it's what, $3.95 or something like that per transaction. You know, one time, but you got to pay for those. And as I'm learning to trade and everything, like I'm making 100 transactions in a day. I make 1 share, 2 shares, sell 1 share, sell 2 shares. I'm making hundreds of transactions in a day, so I can never do those OTC stocks. So are you doing OTC, or are you doing like ADRs and still trading on the American stock exchanges? $2022. That was last year. I had a pretty good year, 2021. Did all right, and then I hit a wall. I hit a brick wall, and so I stopped trading. I stopped trading large amounts of money then, and so I backed it down, backed it up, and I've really been trying to figure out what makes sense And that's how I came to trading one or two stocks. And like I said, right now I'm just only looking at TQQQ. So, all right, but can we get rid of this last one? All right, so in this last one, the average true range moved up. Okay, this one it moved up. This one, oh yeah. It moved up. Okay, so this one here, if we look down at the bottom, I'm looking at the bottom, looking down here, and now I'm looking up at this candle right here. So from this candle to this candle, that also moved up. So that wouldn't help. And this candle to this candle, it moved up. This candle to this candle to 2 candles ago, it 1657, it moved up also. So 2 candles ago it moved up. And you can also reference more than 1 candle ago, more than 1 bar ago. Some of the times what I do, and I find like this one, you know, or I look at wicks, I'll look at wick length. So if we could identify this one, that might have been cool for wick length. But like I said, I took away the condition of a bear or bull, and it didn't identify this one. So, you know, it's not necessarily a bear or bull, it's a doji, but it wasn't identified. So wick length is not going to be something that's helpful there. All right. Sometimes I look at distance from the close to the close. That's a certain amount. This close to this close is a larger amount. This close to this close is a certain amount. This close to this close is, I mean, sideways. So that wouldn't work. Or I could do from low to low, or from high to low. That's the distance there. High to low. High to low would also be a distance. Pretty good distance there. So yeah, I'm not seeing anything pop out at me. And you know, some of the time I'll sit here, probably, you know, I get off the chat here, and I might come back to it later tonight and spend another hour just looking at this. Kind of like you said, just trying to find one of those conditions that it's like, boom, it's a game changer. And so I think that's the work that needs to be done to really make significant strides in this thing. All right, let's see if we go like 1, 2, 3 bars ago. 1, 2, 3 bars ago. 1, 2, 3 bars ago. 3 bars ago, the ranges are pretty low. Well, then that would still apply for this one too, because it'd be 1, 2, 3 bars ago. It's low. Let's see. 1, 2, 3 bars ago. This bar is over all the EMAs. 1, 2, 3 bars ago. This bar is not. 1, 2, 3 bars ago. Nothing going on there. And the volume. Yeah. Well, I can't figure out anything else to make it look better. All right, so let me see what you got here. APL fourth quarter, they come right now. Pretty much saying clear unless clear.
Motion detected.
There are plans. Let's see. Pretty much say clear of OTC unless there are plans for it to be uplisted to. Yeah. There you go. There you go. Now is that for reasons? And again, like I said, it sounds like you are fundamentally inclined. Is that for reasons of the fundamental analysis, where you're like, all right, well, they're not necessarily strong companies. They don't have strong financials. They don't have a lot of capital. Is it for those reasons that they aren't necessarily stronger stocks, or is it because, well, and I mean, those are all the reasons why they're on OTC for the most part anyway, or is it because of the, the different regulations or being less regulated, or the cost of the transactions. All right, and then just kind of like I was telling you before, let's see. I'm gonna get this language out of here so you can see what's going on the chart. I didn't realize you couldn't see all that. But yeah, so this is what we have, and like I say, here you might have got stopped out, right? So at best, on a day like this, if you can make a show me that is suitably fitted for such a day, such a gap down day below 200 EMA, whatever, you might say, all right, your stop loss is this number here. Your stop loss is 0.36%. But then how much did it move up? So from here, if you got in on the open, let's just say here, 0.3. All right, we're getting a little muddled in there. All right, what's this line? Percent change went up 96%. So we would have risked 36% to make 96%. So almost 1 to 3 risk to reward. All right, and then what do we look like on this one over here? All right, we see that tail right there. Well, that wasn't even the tail, because that's what I drew down to the -2 standard deviation. All right, so here we got in at the very bottom, right? So like if you're looking at the strategy optimization report, it would show that you got in at pretty much 100% efficiency, because you got in at the very bottom. All right, so you might not risk. I mean, you're always risking something, so let's not say that. But let's say you would risk from that entry there down to this level here, because that's your next. I mean, that's your next level. I mean, it's just whatever it is, that's your next level. 0.57%, but it went from there up to here. So it went up to what? 2.3. So let's say 0.6 up to 2.3. So that's almost what, 1 to 4. All right. So I mean, that's pretty good, right? All right. And then if you were to get in here, that goes down. Or you could make your stop loss the -2 standard deviation of VWAP, right? You could make it that. This guy here, we're going to delete that. But that nice wick, we'll use that wick as our stop loss. So we'll just put that back. That is -50% or 0.5%. And as far as how far up it went, 0.5 up to 1.6. So again, we'll call that a 1 to 3. So on this one here, we'd say what? This is a 1 to 3 strategy. And actually on this day, we would have lost this one right here, because we would have lost on this one. And then we would have made what? 3. So now we're down 1, up 3, so we're up 2. We're up 3 more, so we're up to 5. We're up 3 more, so we're up to 8. So we risk. So whatever our risk was for the day, we made 8 times that. Amen. Amen. I'll go for that. I mean, those sound like good numbers to me. I will go for that. All right, let's see what you got, NASCAR. Let's see. Whew, 1,000 stocks. Shares outstanding. Trading between 2 and 950. Yep. Exchange for me. Yeah, lack of regulations, absolutely. But I tell you what, man, that's another thing, NASCAR. That's another thing that why I feel like Thinkorswim is it's a little bit more. It's superior in the aspect of I'm running a 10-year-old Lenovo laptop, and it's warm right now, especially while I'm running this the streaming software. But it's warm right now. It could go at any time. I backed up all my stuff to the clouds and off to my external hard drives, because it could go at any time. I mean, it's a beauty. It's a beast. but it could go at any time. And I find that TradeStation, a lot of the computations seem to happen on my computer. Whereas with Thinkorswim, it seemed like all those computations happen elsewhere because it didn't drag my computer down. It didn't drag my Thinkorswim didn't drag my computer down at all. I'd have all kinds of crazy formulas and everything. It didn't drag it down. Easy language will drag my computer down, especially if I have multiple charts open. So, you know, and I'm looking for another computer now because, like I said, I know that, you know, knock on wood, it's near the end of its life, and so I'm looking for, and I'm probably looking for a desktop. I used to do a lot of, like I said, I probably over traded, so I took my computer with me all the time. I was always, you know, in and out, in and out. Now I'm more structured, and so what I do is here at the desk, and I do most of my trading and studying here at the desk. And so I'll probably end up getting a desktop, getting a tower, you know, big cooling fan, whatever. I can set a fan on the floor with it, whatever. But yeah, another difference between Thinkorswim and TradeStation. Yeah. All right, but I think I'm out of it, NASCAR. I mean, we can hang out and do this for a little bit longer, but one other thing I wanted to show you is if I move this, if I go over, so right now I'm on the 5 minute. If I go over to the 1 minute time frame, we'll see what this. You see what this same code did. So it gave me a few potential entries here, which were all false. And then this one over here gave me this one. All right, but if we look at this one, and this is, like I said, this is what I think that Thinkorswim probably would do a little bit better job of, being able to kind of overlap and see what's going on multiple time frames, because I could actually tell the algorithm, if this looks right on the 5 minute time frame, put an orange dot or cross or whatever. If this looks right on the 1 minute time frame, put a yellow cross. And so I could see both crosses on the same screen at the same time, whereas with easy language I can't do that. But what I can do is, you know, I mean, you can't get everything. You cannot get everything in one place. And so it just is what it is. So I'm gonna do that. What did we do there? I'm gonna do that. I'm gonna put a field color of I don't know, yellow. That's not a bright yellow, but yellow just signifies that this was identified on the 1 minute chart. And so now I'm gonna go back to the 5 minute chart, and so this is one of those areas that we were kind of looking at before, but yeah, it did get it. Okay, so this one here it did not get, so we'll just move this one over here. All right, so we got this yellow here on the 1 minute chart, it signaled it, and we got a signal on the 5 minute chart. Would you say that would be a good time to enter? Probably. All right, these over here, they were also signaled on the 1 minute chart, but the better entry was down here at the on the 5 minute chart. So it was signaled on the 1 minute and the 5 minute. Would you say that that's signals of confluence? That those are multiple signals, kind of telling you the same thing on different time frames? Whoever's trading on the 1 minute time frame, whoever's trading on the 5 minute time frame, everybody's kind of getting together, and yeah, probably so. So that's what I'm trying to look at now. So what I'll do is I'll double tap that back out into this screen, and then so now I'm looking at what I'm doing for everything, right? So I got my 5 minute up here. This is supposed to be let's see, this is supposed to be that. Let's see, that. Okay, it's supposed to look like this. All right, so have my 5 minute up here, 1 minute up here, 15-second down here. So, like I said, I'm supposed to have enough algorithms and codes in place so that whenever the chart opens for that day, if it's an AM gap up, then I'll put my AM gap up on each one of my charts. Just sit back and wait for my signals to tell me, all right, well, boom, it's hitting it on the 5 minute, boom, it's hitting it on the 1 minute, hitting on the 15 seconds. All right, now it's time to get in, right? So that's what I'm looking at. That's how I'm trading these days. I'm trying to trade multiple time frames with looking at the large time frame bias and just trade in one stock. All right, yeah, multiple time frame alignments would be really useful to see at once. Absolutely, yes. If I say Thinkorswim has got easy language beat there. Do like that, but then I have 3 charts with different time frames for whatever sucker. Yeah, so we're literally doing the same thing, right? 3 charts with different time frames. Yep. Button that turns green when it should. Yeah. Yeah, that master button. I mean, it'd be great, but and I think that's probably the difference between somebody like yourself who's putting together those different pieces of the puzzle, right? Like you say, you're looking at the IPOs, but you're also looking at these other different factors. Whether it's low float, lockout. You're looking at all those different things. And so you're the one who's going to make the money because, people who want to press the easy button, they're everywhere. They're literally everywhere. I mean, they're everywhere. But people who are willing to do the work, those are the people who are going to, those are the people who manifest, who, I don't want to say who have the most value because other people have value too, but the people who are willing to do the work are willing to shine. I mean, they're willing to put that value to use. I don't know how better to say it, I really don't. But yeah, man, I hope you subscribe to the channel. Like I said, TQQQ is pretty much all I'm going to do until I get it mastered, and then I'll move on to some other things, and maybe just for fun. Other times I may work on scripts for other tickers, but I'm pretty laser focused, right? So I'm pretty much going to hit this, and I hope to catch you on this chat some other time, and you can tell me a little bit more about the IPOs, because it's not something that I'm opposed to, because I think that having a diverse portfolio, whether it's day trading, whether it's ETFs, getting the IPOs, having a diverse portfolio is important. It's hard to lose everything at once. It's not impossible, but it's much harder. So I appreciate you staying and chatting with me, and NASCAR, I'll check you later.